All right, good afternoon, everyone. This is Joe Bicella here at Chaikin Analytics, and I'd like to welcome you to our presentation of Boost Your 2017 Options Profits, How to Generate Immediate Income Using Buy Rights. Presenting today is Josh Mindlin, Director of Client Success here at Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, Josh is here to tell us about Mark Chaikin's latest contribution to the financial industry, the Chaikin Power Gauge Rating, a proven 20-factor model that uniquely combines fundamentals and technicals. To show you how you can use this for buy rights and income strategies, here's Josh Mindlin.
Thanks, Joe. Good evening, everybody. Very excited to be here with you this evening. I thank you for taking time out to hang out with me. We're going to have a great evening. We're going to talk about buy rights, proven income strategies tonight. So let's get started. Now, we're going to start by talking about how to maximize your options performance. I talk to people all the time, one-on-ones, coaching sessions is part of my job here as the Director of Client Success, and we talk constantly about how we can maximize our options performance. I'm going to share some of that with you tonight. Some of that has to do with pinpointing ideal entry and exit points. When you want to get into a stock and get out of a stock, being able to identify the best entry and exit points can really help you increase your gains. Now, we do that in a repeatable process. So we're going to learn a repeatable process tonight for buy right strategies. And I'll get into more what a buy right is in a minute for those who are not sure, but I'll explain that. Stick with me. And to do that, we're going to develop an easy system to generate consistent income, a repeatable process through an easy system to generate consistent income. A little bit about me. I have extensive experience in trading and training people in options. The people I've taught are extremely successful, and I've been very fortunate to be coached and mentored by countless experts, guys who are former fund managers, floor traders, market makers. I've had the great experience of learning from them. These are people just like Mark, and I've been blessed to be able to work with Mark and learn from Mark, and that's an incredible experience. And so what I'm going to do is bring to you what I've learned from experts like Mark Chaikin, okay, and share with you some of the things that I've been taught that's helped me develop a consistent, repeatable process for profits. So I want you to imagine your options performance. I want you to imagine if we turbocharge that, if we were able to increase your returns, if we were able to generate more profitable trades. So not just the trade itself being more profitable, but a greater number of profitable trades. Imagine if some of those losing trades, we could get rid of them and replace them with winning trades. And we can do that. You can learn how to do that. We do that by learning how to optimize our strikes and our expirations, by learning how to balance our risk and reward, and with the right system, dramatically improve your timing. Now, why doesn't everybody do that? Well, people run into problems, and these are all solvable. I want to say that right off the bat. Everything you see on this screen right now is something that is solvable, something that I've coached people to overcome. But I see this with people starting out. They don't have a repeatable strategy, and it leads to just strings of unsuccessful trades. They don't have a sense of direction, and they shoot from the hip. Shooting from the hip, never a good idea. You need to have a sense of direction. We're going to talk a lot about that directional edge that Chaikin Analytics and the Power Gauge gives you. Another one is they're not sure when to buy or sell. And we have a chat box, and we'd love to hear from you. You know, if this has ever happened to you, please chat in. You've been looking at an opportunity, you've been thinking it's a good entry point, and you just don't pull the trigger, and then off the stock takes, it just goes zoom, right? Or you've had a good trade, it's up, and you think, all right, just a little bit more, and then it drops on you, right? Has that ever happened to you? I know starting out it does, and we can fix that. So knowing when to get in and when to get out is something that's fixable, and we'll talk about that. Oftentimes, I find that investors in the market are like kids at the pool, right? They're happy to dive right in. They never want to get out. They're just having so much fun, but you got to get out at some point. So we're going to talk about how to identify when is the time to get in and when is the time to get out. The other common problem that I find that people have is information overload. Any of you ever have that problem? Looking at so many things and it's hard to tell which is most important. Well, when you have a consistent, repeatable process and a consistent, repeatable strategy, you can just zone out all of the noise and focus just on what is important for you to be successful. And we're going to talk about how we do that. So, buy rights. Buy right strategy is where you purchase 100 shares of stock or 200 increments of 100 shares of stock, and then you immediately turn around and sell a call on those shares. So you're leveraging the shares you just purchased and selling a call against them to, one, lower your cost basis and provide some downside protection, but two, to pull in some income, to give you some income right off the bat. It's a little bit like a lease to buy option in the real estate market. If any of you have real estate investments, sure, you want the investment property to rise in value, and we're looking for the underlying equity to do that as well. But part of what you're doing is you want that rental income. You want that consistent income coming in off of the asset you have. So that's what a buy right is. It's leveraging stock as an asset and then generating income off it and getting hopefully some price appreciation in the process as well. So we're going to go into more detail about how we find these ideas and set them up. Here are my rules for trading, generally speaking, right? First, and these are things that I've learned again from Mark, from people like Mark, from the people that I've been blessed to be mentored by. You have to have a repeatable strategy. You need to have a strategy where you can unemotionally do the same thing over and over and over again consistently. Now, to do that successfully, you must have a directional edge. I get my directional edge from the power gauge. We're going to talk about that in a few minutes, so stick with me on that. I've got more to say about that, but you have to have a directional edge. Okay, it really, really increases your odds of success, and it's about putting all the odds of success in your favor. Next, you need to know what to buy. What to buy is very important. If you don't know what to buy, you're going to find yourselves on the wrong side of trades all the time. So knowing what to buy, very important. And finally, once you know what to buy, then you need to, again, identify those entry and exit points so we can maximize our trade. So these are my rules for trading. You can write them down, and we're gonna talk about them as we go on here. So rule number one, a repeatable strategy. I have a routine. I have a routine. I do it every week. I coach people who have a routine. They do it every couple of weeks. Some do it every day. We can you can have whatever routine you want, but you should have a routine. And mine starts with finding the right stocks. All right. So once I find them, then I go through my analysis. And my analysis is a routine too. It's effectively a checklist. I'm looking for the same criteria over and over and over again. So once I find them, I do my analysis. Once I do the analysis, I put money in my hand, in my pocket. All right. Repeatable strategy. Very important. John Carter, uh, well-known options trader, very successful options trader. He's been consistently generating positive results for his subscribers for 10 years now, and he calls the power gauge rating an objective awesome meter for stocks. And we'll talk more about the power gauge, but John Carter uses it, I use it. It's very, very, very effective for helping you be on the right side of the trade. And that comes to our directional edge. The power gauge rating is back tested and proven that the bullish rated stocks outperform the overall market, and the bearish ones underperform. It's based on 20 factors. It's developed by Mark. It's his entire career put into one objective quantitative model. Here's our life to date, and you can see how well the bullish and very bullish stocks have performed against the average return of a stock. And you can see how poorly the bearish ones return against an average stock in the market. Now, it's good to know, as I said earlier, what to buy. Knowing what to avoid is also pretty critical. That right, investors manage risk, and they do that by avoiding things that are going to hurt their, like underperforming stocks. The very bearish gives me my directional edge. It puts the odds in my favor, and it is objective. It is unemotional. It is an unemotional system, and models beat humans for that reason. They're unemotional. We get greedy. We get fearful when things get down. We get greedy when things are up. Power gauge rating doesn't have that. It is an objective way to get a directional edge in the market. All right, John Malden, well known, highly followed economist, and he has integrated his due diligence process. This guy has over a million subscribers that follow him. Him and John Carter, both well known and well regarded on the street, both used rating system. Now, I'm not quite well as known yet, but you know, we have goals. Next, what to buy. So I've got my process. Now I'm going to look for the qualities that indicate to me what I should be buying. As I talked about, first I use the power gauge rating. Power gauge rating, back tested, proven to be an edge in terms of what direction something is going to head. The next thing I use is the Chaikin money flow, what the institutions are doing. Institutions are move the market. We want to be on the side of the institutions. You don't want to. We can use to help us identify what institutional investors are accumulating or distributing the stock. We want to be on the same side as institutional investors. With the power gauge rating, we're starting to stack the odds more and more in our favor. Then we look at relative performance. Relative performance is a measure of a stock's performance against the S&P 500, or an underlying benchmark. S&P 500 is what's used. That's what we use in Chaikin Analytics. Now, why is that important? I want you to think of S&P 500 is an average. Right? We would be in above average stock. We want to be in stocks that are. Who wants to be in something that's below average? If I said I had a below average sandwich for you, would you want that? Of course not. We want to be in things that are above average. So we want to stick with relative performance that is above the average. Add that in. Again, we're just stacking odds in our favor, giving ourselves that repeatable edge, repeatable strategy, repeatable edge. So now I know what to buy. I want to buy things that are rated bullish, have good money flow, good relative performance. The other side of that, the other half of that rule, is knowing what to avoid. As I mentioned earlier, avoiding big losses in your portfolio is very, very important. Own things, buy things, institution investors are getting out. Right? If they're getting out, we certainly don't want to be getting in. And finally, relative performance weak, we don't want that. We don't want below average stuff for our portfolio. If we have a long portfolio, especially if we're looking to do a buy right strategy, which we're talking about tonight, we want to avoid these things. Avoiding these things is very important. I can't really stress that enough. Now, once we know what to buy, we need to know when to get in and when to get out. timing our entries and exits. I have a couple of things that I use that are right on Chaikin Analytics that give me an edge in when to get in and when to get out. The first is Chaikin money flow. This can help give me an indication if institutions are starting to leave a stock or if they're starting to get in. The second is the overbought, oversold. OB/OS stands for overbought, oversold. And that is an indicator that we have on Chaikin Analytics that I use to help me time my entries and exits. Right? I don't want to buy things that are necessarily way overbought. Also, the volatility bands. These are proprietary volatility bands developed by Mark, again, utilizing his career and his experience on Wall Street. He has these volatility bands he's developed that help give me an expected range for a stock. So I don't want to buy when I'm up against the upper band, and I don't want to sell when I'm down against the lower band. Right. So this again helps give me a sense of when is the right time to get in, and just as importantly, when is the right time to get out, say to the market, thank you for my profits, and move on and do this again, right? It's a repeatable strategy, rinse, repeat. Know what to buy, know when to get in and out, and then just repeat it. So let's review real quick. Buy rights and consistent income generation, right, comes from leveraging existing assets and locking in preferred prices while having an edge in terms of directionality and timing. Here are my quick rules, my smart guide for buy rights. These are specifically for buy rights. So I want that the stock is not at the upper volatility band, which I mentioned earlier. I want it to be in a strong industry group. There's an old adage that rising tide raises all ships. So we want to be in the industries that are strong. Again, it's just about stacking odds in our favor, and we can do it little by little here and add them all up, and then you have pretty good odds of success. So strong industry group. Finally, I want a return for my efforts of at least 5%. I don't want to be greedy, but I want to get paid, right? I'm trying to generate consistent income here, so I want at least a 5% return. That's what I'm shooting for. So, with those in mind, let's apply our rules. Now, one of the things that I've done is I've utilized Options Play. Options Play is a widget that's fully integrated into Chaikin Analytics. It's part of the subscription. It's no additional cost. It's fully integrated, and it helps me find and identify my ideal entry and exit points. It's widely used, very good. So here is Micron. Some of you may have been following Micron. I am currently long Micron, and I found that this was a good buy right opportunity. So this is a setup that we like. This is a setup that has good odds of success, right? It has all the things that I'm looking for in terms of the setup that I look for. And this was pretty easy to find because I have a repeatable process. I was able to go in, run my search, go through my my checklist, and identify a couple of good examples, just like Micron. So I clicked on the options button and pulled up Options Play, and I went through and I looked, and I found the June 16 expiration, 45 days out, the 29 strike, and I'm going to take in 78 cents. So if we were able to catch Micron somewhere in the 27.50s or 60s, and then turn around and sell the 29 strike, we'd take in another 28 cents. That would give us a profit target of $29.78, over $2 above where we're at currently. This is a potential opportunity that would yield you about 8% in 45 days, in a month and a half, in 6 weeks. All right, how does that sound? Pretty good to me, I think. And this again is something that we can do over and over and over again. So we can go find potential opportunities that are able to yield us 8% in 6 weeks, Think how many times you could do that in a year. You can see over here that options play gives me my annualized return. This is just for the covered call itself, not even for the stock appreciation. Just if you just were able to consistently sell covered calls against this stock at about the same premium rate, you would generate about 23% on the year. It's a darn good return. That doesn't even include the capital appreciation of the underlying stock. All right, so that's one example. Let's look at another. This is Franklin Resources, ticker BEN. Again, another stock that met my criteria. Came off the upper band, has a nice long-term rising trend line. We're above it, strong industry, great. Next, let's go find and see if there are options that help us meet this criteria. And I looked and we found the July 21st expiration 45 strike. You're going to take in 90 cents for this at the time that I took a look at this earlier this afternoon. If you got in around 42 and a half, 42.60s in that area, you would turn around, your profit target would be $45.90. Now, $45.90 gives you about, again, almost an 8% return, this time in just under 3 months. Imagine doing that every couple of months. So every 3 months, we just turn around and churn out another 8%. All right. Now, buy right strategy, a little more conservative, but consistent, easy to apply with the right system. Let's look at another example here. And this is KB Homes. Again, KB Homes just came off of the upper band recently. Again, exhibits all the qualities that we're looking for. Look at the institutional piling in that I see in the money flow. It's been consistently, persistently green for some time now. We're coming down to the oversold. Very good setup, nice conservative setup here. So I went and I checked out the options for KB Homes. Now, in KB Homes, I found the July again expiration, 80 days out, 21 strike, and we were able to pull in a premium of 76 cents on this. All right, now, again, if you just were to take in the calls annualized, you would see that's about 17% annualized just on the premiums themselves if you can consistently do this every 80 days. Add in the price appreciation that we get from the buy right, and again, we're looking at about an 8% gain over the amount of time that we have. That's a good amount of gain, and we can compound this over and over again. So let's review. We're going to look for stocks that are bullishly rated, that give us a good directional edge, that have consistently strong money flow, that are above the market. They are above average. They have positive relative strength. When we find that setup, we go look at the options and we use options play to help us hone in quickly and identify the right expiration and the right strike that gives us the type of return that we'd like. So we went over 3 examples here pretty quickly, and I want to go back and just make sure that everything I need, all right, I want to stress this, everything I need for my repeatable process is sitting right on this page right here. Once I've identified it, once I've found the stocks, right, and we have tools to do that. We've got a great discovery tool, which helps you discover great stock ideas. We've got a screener. We have different tools to help you identify stocks that meet your criteria, and then everything you need sits right on this screen, and I just go through a checklist. Check, 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 check. Everything checks off, move on to the next step. Something doesn't check off, I move on. And that way I can be objective about it and repeat the same process over and over and over again. I'll tell you, once you have a repeatable process that consistently generates profits, you'll get bored making money. I know that probably sounds crazy, but trust me, when you have a repeatable process that you can just do over and over and over again, and with the edge in your favor, then you can get bored making money. So it's about finding the right setups, having a process to identify them quickly, and then going in and finding the options that match. And you can do that all without a ton of time, which is the beauty of this. That's what happens when you have a repeatable process. You take emotions out of it and you give yourself an immediate edge. All right. And then I just went, and again, I went and I found the options setup that matched what I wanted to do. And the options play widget puts that all in front of you real quick and easy. So, Jim's one of our subscribers that I've coached, that Joe's coached, that we've coached for a while. Jim is employing this kind of uh, process and strategy, and he has a very nice, easy night's sleep. Right, a conservative strategy to consistently generate a nice return. You can see that he's not swinging for the fences, slow and steady. He's winning the race. So let's just quickly go over my rules again. One, repeatable strategy. You gotta have a repeatable strategy. You need to be able to, when you sit down to do your analysis, to already know what you're going to do before you even sit down and open up your computer. Right. So every Monday morning, I know exactly what's going to happen when I flip open my laptop. I know exactly what I'm going to do because I've been doing it over and over and over again every single week. You must have a directional edge. You got to have an edge in the direction the stock is going. This is very critical for options trading. It's critical for any style of trading, honestly, but especially in options trading, where you have a specific amount of time typically and a price target that you're going for. You want to know that you're going to be heading in that direction. So, you know, must have a directional edge. The power gauge rating is an objective directional edge. It is often referred to as a quantitative analyst in a box without any emotion. It's very powerful. Next, you need to know what to buy. We talked about how to identify what to buy by looking for a couple of things, right? Remember, I said we got to block out all the noise. We have to get rid of all the noise. We can't try to take in 1,000 different data points. It's not helpful to us. And then we get paralysis by analysis. We need to focus in on what is important. And the way I do that is I look at 3 specific things to know what to buy. I want to know that the power gauge rating, my objective directional edge, is telling me I'm headed the right direction. I want to know that institutional investors are also going the same way, that they're buying. I want to be on the side of the institutions. Finally, I want it to be an above average stock, no below average stocks for a buy right strategy. Next, I identify my entry and exit points. We look at a couple of indicators, all of it right on that screen for you, that give you a quick and easy way to say, yes, this meets my preferred setup, or no, it does not. We look at the money flow to make sure that money's still coming into the stock. We look at our overbought, oversold indicator to make sure that we're not getting in after it's already been really bought up. And finally, we're looking at our Chaikin volatility bands. These are proprietary bands that help me identify the expected range of a stock. And I don't want to get into a stock when it's all the way at the top at the upper band. That's not where I want to enter. That doesn't give me the best odds of success. I want things that are coming off the upper band, right? So that helps me know when to get in and when to get out. To do that and to generate consistent profits, you have to have the right system. And what I've talked about tonight is the way that I have my system, my setups, the way that I go about it, and the system that we talk to people about using in terms of helping them set up a system that works for them, right? That meets their goals and their objectives. A buy right strategy is just one of many ways that you can go about being profitable. It happens to be a nice conservative way to generate income over and over and over again in a simple, repeatable process, simple and easy, repeatable process, right? So, Chaikin Analytics, proven stock selection system. With Chaikin Analytics comes the 20 model factor that combines fundamental and technicals to give you, again, that objective awesome meter that John Carter mentioned. All right, that's what John Carter calls it. I like that. Objective awesome meter. You can see there's a stock discovery engine there that helps us generate ideas. I use that to find the Ben idea today. So that helped me find a nice idea for me to show you all tonight. And we have a screener as well, which helped me find one of the other ideas. All right, put that all together, and you already have an edge in the market. This is another one of our subscribers, and I want to say two things. One, he was doing a more aggressive, he was outright buying calls and call spreads, put spreads here. These are debit strategies. They're more aggressive strategies, but using Chaikin Analytics, he was able to get a good return on them. And we can show you how to integrate Chaikin Analytics into that sort of strategy as well. That's not what we focused on tonight, but I know that I'm sure we have people on the webinar tonight who are looking at not just income strategies, but others as well. We spoke specifically about income. Now, in addition to the power gauge rating, this discovery tool, the screener, the proprietary indicators, we have intraday alerts and price updates. We have earning alerts. We're in the middle of earning season right now. I mean, this is a great opportunity that we have in front of us to find high quality stocks with good earnings potential, which is part of the power gauge. We can use the power gauge to help us find good earning potentials. So we have that on there as well. Also, newsletters, both from Mark, puts out a weekly newsletter. Part of my Monday morning routine, I read that newsletter. I want to know what Mark's thinking. I want to know what his 50 years of experience is telling him. I want to be with him, right? He's the expert. That's what you want to. You want to be with the experts. So I read that every week. Also, every morning, John Schlitz, our chief market strategist, puts out what we call morning insights, which is a quick wrap up of yesterday and a look forward to today of what we can see in the market, what's reporting, what's been moving recently, some different signal ideas. We have stock signals that give you buy and sell ideas. That's all in the morning email from John Schlitz. I read that every morning as well. I want to know if our chief market strategist is looking at a specific opportunity. I want to look at it as well. I'd be silly not to. So I read that every morning. So that's all included in your Chaikin Analytics subscription. Normally, it's $19.50 for a year with Chaikin Analytics. Tonight, you can subscribe. We're giving you $300 off. You can get in for just $16.50. Right? Just $16.50. Now, I showed you there's more. Not only do you get the discovery tool, the screener, the morning insights, Mark's Weekly, but we have small group tutorials that we do every week to help you set up and use all the features of Chaikin Analytics. My wonderful colleague Joe and I offer unlimited coaching and support. So as a subscriber, we'll get you up and running. We have different webinars that we do just for subscribers during the week that you can participate in right away. And you get to work directly with the team and me. And the wonderful graphics people even put up a neat little graphic of me. In fact, that almost looks like what I was wearing today. So that's what you get as a Chaikin Analytics subscriber. Now, I speak to our option-oriented clients all the time, day in and day out, and they find that the methodology that I discussed with you tonight has improved their profitability. And so if you're doing options and you're looking for an edge, I think that this can help you improve your profitability and give you more consistent returns. So you can subscribe by going to chaikinanalytics.com/options, or call us. You can call us right now. Talk to my colleagues, 8779 stocks. So again, you can subscribe at chaikinanalytics.com/options, or you can call us. We'll answer all your questions at 8779 stocks. I really appreciate everybody being on the webinar with me today. I tried to keep this under an hour, and I think I met my goal. I'm goal oriented, and I hope everybody's learned a little bit about how we go about generating consistent income from buy rights. And I look forward to speaking with you in the future. With that, I hand you back over to Joe.
Awesome. Thank you so much, Josh. So to summarize Josh's offer here, in fact, I know there's a few questions that did come through, and I know we're a little bit early. Feel like answering a few questions here, maybe. I saw there's a few detailed questions that came through. I know there were a lot of comments regarding money flow. So with Chaikin Analytics, of course, you have a variety of different indications. Most important, of course, is the power gauge rating, as Josh mentioned, 20-factor model. One of those happens to be money flow. And if you want to, I know there's, for Micron specifically, I saw a few people mention that. Maybe just tell us a little bit how you feel about considering a bullish strategy on a bullish rated stock, but perhaps has a little bit of negative money flow.
Well, that happens, but I want to.
You're muted. Sorry.
So not a tech wizard, but we look at money flow and we want to see the persistency of money flow. And so what we want to look at is see the overall picture of what's going on. And for the last 6 months, we've had incredible persistency of relatively high money flow. So having a little bit come out now, not a concern. I'm more than happy to hop. I'm long this stock right now. I own shares of Micron, and I sold a call against it.
Awesome. And speaking of selling calls on a stock, I saw Bob had chatted in here saying that so you're purchasing the stock and then you're just selling a call against it. Is that correct? Is that about a fair way to summarize it?
That is precisely it. We're purchasing the stock and then we're leveraging it to sell a call against it. If it doesn't get called away, then we've offered ourselves some downside protection. That's the beauty of the buy right. But we're going to be in strong, bullishly rated stocks that we want to own anyway. That's what we're looking for. So we're already in a good, strong name. Now we're just trying to squeeze it for more and give us that objective exit. Right? There's a reason I picked out the strike that I picked, and it has to do with the picture you see in front of you. Now, I'm not going to get into all that now. It's not really the time for it. But we have a way to go through analyzing this, and I have a routine that gives me a really good set of data points that tells me where to get in and where to get out. And you can just look at the stock's performance relative to the bands.
Awesome. And I saw Ken mentioned here, how do you feel about using stocks? I mean, what happens with your downside risk? What if the stock ends up tanking? Any thoughts on using stocks and where to place them, perhaps?
Well, if you're in good bullish stocks, you shouldn't have too much risk of it tanking. If you're following the methodology that I went through tonight, you shouldn't have a whole lot of risk of that. In fact, one thing that we talked about this morning in a morning meeting was AMD recently went bearish. And I don't know if you followed the news today, AMD's down. So if you saw that, that would have told you immediately, hey, you're not in a high quality name anymore, right? So different ways to employ risk management against something like that. Again, now it's not the time for it, but what we're looking for is high quality names where you can then go and sell cover calls against. All right, one more. So yes, I have another question here. If the stock does not get called away from you, then what we're going to want to do is turn around and sell another call. That's one of the reasons that I pointed out at the options play page that I was looking at, the annualized return. That was just on the covered call premium, not even including the uh, the price appreciation that you can expect to get in stocks that are likely to outperform the market, that are bullishly rated, and that have good persistency of money flow. So that's something that I don't mind happening. I just turn around, I sell another call. If I'm using the methodology that I'm using, which I am, then I know what to expect. I know what my odds of success are because I have the same repeatable process over and over and over again. I have a good sense of how often I'm going to be right. What can I expect to make out of that? And that's the beauty of having a repeatable process and a good system.
Awesome. Awesome. Well, Josh, thanks so much for spending a little extra time with us this afternoon. And so you've just seen an example of Josh asking right off the cuff questions regarding a pretty complex strategy in the market. So just to reiterate his offer again, $16.50 for a full year to Chaikin Analytics, plus that ability for one-on-one sessions. I wanted to make sure we did a little bit of Q&A to give you a taste of what it's like to have that one-on-one conversation. What happens if you have conflicting money flow? What happens if the stock continues to do well? What about stops? There are millions more questions we've encountered over time working with thousands of our users right now. And so not only will you have access to Chaikin Analytics at a great offer for a full year, but you'll have access to us, of course, for all the support that you could really look for with the program. So that's $16.50 for a full year. Chaikin Analytics, chaikinanalytics.com / what was our code here? I know it's automatically options. There you go. Chaikinanalytics.com / options. If you look in the chat window, you should see the link available to you. You can also give us a call. Our support staff's going to stick around a little bit later today, 877-978-6257. There's a question here. How can you find strong stocks in a strong industry group? How do you pick up on sector rotation? We have a lot that we can help you with here, but give us a call and we'll be happy to do a live demonstration with you. So thanks all for sticking around. Keep an eye out for the recording of our session. We're going to send this out tomorrow morning. But in the meantime, have a wonderful evening, and we'll see you on tomorrow's onboard session.